presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compak Asset Management Market Wrap YouTube update for February the 5th, 2021. I'm Moe Ansari, President of Compak Asset Management and host of Market Wrap. You can tune into the daily edition of Market Wrap every day simply by going to the Apple Store, downloading Market Wrap with Moe Ansari. That's Market Wrap with Moe Ansari. Type that in and you can download the app and you can get the free update every day, the 1-hour radio broadcast that I do on a daily basis that a lot of you have been tuning in for the last 30 years. Today I'm going to talk about the pandemic, the update. Obviously it's the fight between the virus and the vaccine. I've talked about that, and the vaccine is about to get into the lead, not quite there yet, but it is neck and neck now. I'll talk about the U.S. market, new all-time high. The S&P, the NASDAQ have never ever closed higher in history than they did today. And then we'll take a look at the technical analysis, what's going on with the charts and the graphs and the language of the markets, as I call it. Let's talk about the pandemic. You can look at that. You can see that the numbers, this was January 13th, about a month ago, not quite, about 3 weeks ago. We were seeing these numbers going straight up, seeing the death rates going straight up. Depressing number. Then we saw last week, we saw these numbers peak out, and then they started to turn down. The death rate, as I said in December, that we were going to see the spike after the Christmas holidays. So many people got together. Fortunately, they got infected. That infection rate went straight up. And when the infection rate gets up, unfortunately, the mortality rate, the death rate goes up about 3 or 4 weeks later. So we were still seeing, we saw this come down to the downside, but we saw the mortality rate continue to go up. But now we've seen the infection rate coming down and the mortality rate. The 7-day average is starting to come down. Today, unfortunately, we hit a new all-time high. 5,100 people passed away, but a lot of that was a big number that came in from Indiana, 1,500. They said they had redone the numbers or so on. I still feel that we're turning the corner very slowly, but we are getting there. We're getting more and more people vaccinated, and as the vaccination goes into the people's arms, that's the good part. Here's the reported cases. You can see in every region. This is the Midwest is yellow, the South, just about every region, the infection rates are coming down, which is positive. The more the infection comes down, the more people we get vaccinated, the more we can open the economy, the more people start to move around. I look at the mobility numbers, and that's one of the numbers that I watch carefully. People moving around, coming out of their homes, finally getting vaccinated, and starting some kind of normal. It's going to be a new normal, but some kind of normal. We're looking at the vaccines. Obviously, we're here now. We've done healthcare workers, people over 65. That's where we are now. And we are seeing some other categories also coming into that. We're starting to see, unfortunately, there's a lot of people who are not getting the vaccine, even though they're eligible for it. They're not getting it, and that's a concern that we're looking at it right now. 51% of the people, this was a poll done by Kaiser Foundation, still remain either hesitant or downright opposed to getting the virus. Well, unfortunately, I think it's going to come down, that number. Again, as people see that other people are doing well, people who are not getting the vaccine are getting sick. It's just like the whole COVID thing. As I'd mentioned to you a year ago in March, I said, look, I don't care what anybody says. When people see people dying, when people see people getting sick around you, people are not going to go out. The economy will not reopen until we get the vaccine, the virus under control. So the earliest we can get a vaccine is December. We got it in December. Earliest that we can start reopening is March. We are getting there now. The more we reopen, the higher the economy goes. You're looking at this is the number of vaccine that was administered on January 27th. We had 13,500,000 doses of Pfizer, about 11 million doses of the Moderna, and about another 100,000 that we didn't know which dose it was, the Moderna or the Pfizer. Now we're at about 34 million doses. Today we gave about 1.3 million doses of vaccine was people were vaccinated today alone. So we're ramping that up. The President Biden has said that we should have about a million people vaccinated a day, or 100 million people in 100 days. If we can get to 1.3 to 1.5 million, we get to 130 to 150 million people vaccinated. Also, Johnson & Johnson today applied for the virus, for the EUA, the Emergency Use Authorization, the EUA as it's called, from the FDA. That's the Federal Drug Administration. So if they do that, they do get that. That's a single dose vaccine. We've already said we can get 100 million doses from Johnson & Johnson. We can get those out. We can get those in the arms of people. Yes, they're not as effective. They're about 72% efficacy rate. But against the virus here, the old variants, the one that is in the US and the British variant, it has got about 85%. Why it comes down the efficacy is against the South African variant, which is going to be tricky. We might need also to get a booster shot for the Moderna and the Pfizer vaccine, because I think it's coming around 50 to 60% efficacy against that particular variant. I believe we'll get all kinds of different variants, but more people we get vaccinated, less the virus is out there, less variants we get out of it, mutations. So, and we can get the economy going. Here's, as we know, if you're old, that's the problem. That's where the mortality rates are high, are here. But if you're younger, yeah, it's a cold. That's about all it is. You're looking at the path to immunity. 2 weeks ago, we were here. Now we are 2 weeks later. From 4 weeks, we will be here. And this is 5 weeks. We can get there. So we're looking at the vaccination rate picking up. I mean, you know, when you look at across America this week, you can see last week when we talked about this, we were seeing the bigger 7 or 8%. Now we've got states at 18%. And you're looking at some of the larger states, they're 10, 11%. So we are picking up some of these vaccination rates across the bigger, larger states where there's more people. And as we get more, again, the more vaccinations we can get done, the earlier we can open the economy. The earlier we can open the economy, the higher the market goes. More people, companies can sell more stuff, and they sell more stuff, they make bigger profits. Here's the, again, vaccination doses administered. We did have days that we did nearly 2.3 million doses. Today, I think we did about 1.3 million doses. So if we can get somewhere around 1.5 million a day, that gives us 150 million people vaccinated in the first 100 days. That means by April 20th, we should have a lot more people. Looking at the markets, interesting thing about the markets, this is a chart that I saw in Fortune. It was out there, and it showed that, yes, the GDP, you can see that a very large portion of the GDP is you look at it as government and utilities and all of that. And you look at the technology sector, it is very small. Then you go here, employment, you can see, again, you can see the government employees, utilities, industrials, that's where the jobs are. But you look at the S&P share, guess what? Largest part of that is technology. So stock market is not the economy is not the stock market. They are interrelated, but not directly related. The market sometimes moves in anticipation. Before the economy moves, the market moves. That, okay, the economy 6 months from now could get better, so the market goes up now. By the time the economy is already doing well, the market has already gone up. The market is looking at the next thing the economy might do, and even though you might see the economy doing well, the stock market coming down, you say, how's that working? Well, the market might say, well, it's doing well now, the economy, but down the road there could be some problems. So the market moves in anticipation. By the time it's obvious, it is history as far as the market is concerned. By the time you hear it on CNN or Fox, it's already done. It's history. So looking at the unemployment rate, we did get that. 49,000 jobs were created, a little bit better than expected. The rate came down from 6.7 to 6.3%, the unemployment rate. But there is a caveat to that. We had people drop off that are not looking for jobs. So the unemployment rate goes down because they're not looking for jobs. But we're still 12 million below where we were pre-pandemic. We've come back up from the depths where we are here, but we're only halfway back. We need to get all the way back to the pre-pandemic levels. And that, people are saying, could take a couple of years to get unemployment back down to where it was then. Let's take a look at the charts, the language of the markets. And you can see last week I was looking at 4,000 For the S&P, well, we are about 3,900 now. We broke out above. Support is going to be right here, the 50-day moving average, and then right here, this magenta line, and that's the 200-day moving average. That's 33.75, and this is 37.41. And we're looking at about 4,000 on the upside. That's the first number. If we do get an extension, we get to 4,200 for the S&P. 4,000, well, yeah, that sounds like a big number. So only 110 points away for the S&P. We're up 40 points the other day in the S&P. So a couple of days we could get there, but that's 4,000 for the S&P. Looking at the weekly charts, well, this is extension. Everything moves in 5 waves, wave 1, wave 2. We're in the meatiest, the biggest wave usually is wave 3. That's what we're in. We could get a pullback. That comes down to 37.16 to about 3,600. That would be wave 4. This is 1, 2, 3, and this would be 4 to the downside. But when will that happen? Will it happen from 4,000? Will it happen from 4,200? If you get an extension of this wave and then come down? We don't know. No one does. Don't argue with the market. The markets do whatever it wants to, whenever it wants to. What you want to do is at the right allocation. Make sure you're working with somebody that is going to give you that roadmap to get you from point A to point B. They do a risk number, where they do a riskalyze, find out what your emotional risk number is, find out what your financial risk number is, and put that in a plan. It's not trying to go in and out, not trying to buy GameStop. Don't try to buy the lottery tickets. Having the diversified portfolio, it's time in the market, not timing the market. That's the key. Looking at, again, the daily chart for the NASDAQ, wave 3. This is wave 3. I was looking at 13,800. You saw me put that number out a few weeks ago. Guess what? We're there now. The next number is way up there. That's 15,200. Well, 13,800 felt like a big number a few months ago. 15.2 is a big number now. We have support at the 50-day and the 200-day moving averages. Again, weekly charts, we're looking at this as wave 3. We're going to get wave 4. Again, wave 5 coming up way up here. Or could be getting an extension of wave 3. That's what we're looking at. Gold, this one does not look good. It broke below the 20-day moving, the 200-day moving average right here, the magenta line. And today, I believe we had what is called a death cross. That is where this blue line, the 50-day moving average, crosses below this magenta line, which is the 200-day moving average, and that is called a death cross. The next support is right here, the November low, which is 1750. If we break below here, and we were down yesterday to the 1770 area, if we break below this number, then I think we can come down quite a bit in the gold market. I would like to see it stay above 1750. And I think there you could buy it as a low risk trade. If it breaks, put a tight stop and go from there. If you have to be in gold. I'm not in gold. This is a chart that I wanted to put up a monthly chart. Usually I don't do that, where each one line, these red and green lines, is 1 month of trading. And this goes back about 15 years as a chart. You can see that this market has been going back and forth, back and forth, back and forth, without really breaking out. We went up here. This was 2008. And here we are 12 years later. Just gone nowhere in 12 years. Up and down, up and down, up and down. We are on the threshold of a breakout. You heard me about 6 months ago talk about this on the radio broadcast, where I said emerging markets are a great value. We see this 6, 7, 8 year cycle where we see the US markets lead, and then we see for 6, 7 years the emerging markets lead. Well, it's been 12 years. We haven't broken out. Emerging markets are on the threshold of a breakout. I hope you added some EEM or small cap in your portfolio, but that's what I'm looking at, emerging markets. If you can get above this number right here, the 2008 high, as you can see, that goes down. Here's the different years right here, and here we are. Each one of these lines is 1 year of trading. We can get above here. That would constitute a good breakout. Small cap, again, one of the areas that has done very well. This week alone, we were up 7.7% for the Russell Small Cap Index. Great week in the markets. Well, the markets, all of them had a good week. We had the best week in the market since November 6th, 2020. Great week in the markets. I hope you participated. Hope you have the right mix of assets. Hope you didn't get shaken out of the market last week. Have the right mix. And that's why we talk to each one of you that are clients of ours, that we do the right right emotional mix and the financial mix so we have the right setup. Don't forget to subscribe, to click on the bell to get notified. First you subscribe, then you click on the bell to get notified of the next video. Whenever I post it, you'll get notified. You can come and see all these charts and get the weekly update. Thank you so much for tuning in. I'm Moe Ansari, President of Compak Asset Management. Don't forget to tune in to the daily edition of Market Wrap on a daily basis. Have a wonderful weekend. I'll be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.